Welcome once again to the topic of accounting ratios. In this video, we are going to discuss the question of accounting ratios, paper 2015, Punjab University. So let's start the question. Question is that following is the balance sheet of XYZ Limited as on 31st December 2005. And liabilities and assets, as you are seeing here, are given, and another information is also given that sales rupees 600,000 and gross profit 20% on cost, and gross profit is also given. So calculate following ratios: current ratio, liquidity ratio, stock turnover ratio, and debtors turnover ratio. So first of all, current ratio, which is equals to current assets divided by current liabilities. So just go to the asset side, and there are, as you are seeing, that machinery and furniture are long-term fixed assets. So stock, sundry debtors, cash at bank, and prepaid insurance. These four are your current assets which can be consumed within 1 year. And liabilities here are current liabilities are sundry creditors, provision for taxation, and bank overdraft. These liabilities you will have to pay within 1 year. So these are your current assets and these are your current liabilities. So simply just calculate these and divide these two. So here at the end, calculation is also given that your current liabilities are 240,000 and your current assets are 240,000. So just simply divide these two, and ratio should be 1:1. Another is liquidity ratio. So liquidity ratio is equals to liquid assets divided by current liabilities. So liquid assets, we already discussed several times that liquid assets are equals to current assets minus prepaid expenses and minus stock. So here our liquid current assets are 240,000 minus 120,000 and minus 7,200. So these are equivalent to liquid assets. So these are calculated here in working number 2. So 240,000 minus 120,000 minus 7,200 and rest is 112,800, that is liquid assets. And current liabilities are 240,000. So simply just divide these two and your liquidity ratio is 0.47:1. Another one is stock turnover ratio, which is equals to cost of goods sold divided by average stock. So opening and closing stock are not given in this question. So simply your stock, closing stock is considered as your average stock, 120,000. And cost of sales, we can calculate from here that sales rupees 600,000 and gross profit 20% on cost. So it means that this 20% is included in this sales. So simply just divide 600,000 divided by 120 and multiply by 100, and 500,000 is your cost. अगर जो प्रॉफिट है वो आपका 20% इंक्लूड है सेल्स प्राइस के अंदर, तो फिर उसका मतलब ये है कि हमने 100 इक्वल पोर्शंस निकालने हैं जो कि आपकी कॉस्ट बन जाएगी, और 20 जो अबव पोर्शंस हैं वो आपका प्रॉफिट है. यही वजह है कि वो 20% अबव कॉस्ट होगा. तो सिंपली जस्ट डिवाइड कर लें 120 के ऊपर आपके पास, यानी कि ये 600,000 इक्वल 100 इक्वल पोर्शंस नहीं है बल्कि 120 इक्वल पोर्शंस हैं. तो आप जिस वक्त 120 पे डिवाइड करेंगे तो आपके पास एक पोर्शन आ जाएगा, और मल्टीप्लाई बाय 100 करेंगे तो 100% कॉस्ट आ जाएगी उसकी, और ऊपर वाला जो 20% है वो प्रॉफिट. तो ये आपका कॉस्ट जो है ये बन जाएगी 500,000. सो सिंपली जस्ट डिवाइड कर दें इन दोनों को, 500,000 डिवाइड बाय 120,000, and your ratio will be 4.17:1. After that, debtors turnover ratio equals to net credit sales divided by average trade debtors. So average trade debtors, opening and closing debtors are not given here in the question, only closing debtors are given. So these closing sundry debtors will be considered as average debtors, 90,000. and what is your net credit sales? Net credit sales is given here 600,000. So just simply divide these two, 6.67 ratio 1. अगर इस क्वेश्चन के अंदर क्रेडिट सेल्स और कैश सेल्स अलग अलग मेंशन होती तो फिर हम सिर्फ क्रेडिट सेल्स को कंसिडर करते, लेकिन यहाँ पे कोई इस क्वेश्चन के अंदर कोई हिंट, कोई सेपरेशन, कोई डाटा गिवन नहीं है, तो हम इस सेल्स को कंसिडर करेंगे कि ये क्रेडिट सेल्स है। तो ये था जी क्वेश्चन 2015 का, और 2015 के क्वेश्चन के बाद जो मजीद आने वाले क्वेश्चंस हैं वो भी जल्द आपको मिल जाएंगे। सो स्टे सेफ, स्टे blessed, and take care of yourself and other persons around you. Thank you.